I'm here with Oliver Horn, the Executive Director and Global CEO of Elixinol Wellness. Oliver, this morning you've announced that you won't be moving ahead with the completion of the CannaCare acquisition, which you announced back in March. Can you talk through the key aspects of today's announcement?
Of course. Look, on the 15th of March this year, we've announced the signing of a share purchase agreement to acquire CannaCare Health in Germany. And today we announced that we've entered into a termination and withdrawal agreement to mutually terminate the share purchase agreement. And really, this is because the German market has become increasingly competitive, and following further closing due diligence, we have elected to enter into the termination and withdrawal agreement as a required investment to achieve profitable growth exceeds our current risk appetite. So the board has therefore taken this very difficult decision, but it's in the best interest of our shareholders. It's also worth mentioning that the shareholders of CannaCare actually will pay a reimbursement to the company of 360,000 euros in respect of certain costs incurred to date for the purpose of the proposed acquisition of CannaCare. And I'd like to say that despite the transaction not going ahead, we are in a very strong position. We benefit from a healthy balance sheet, and following significant transformation efforts, we're very pleased with the progress in our largest markets. And we continue to evaluate new growth opportunities that occur.
Oliver, you mentioned that the German market had dramatically changed since March. Can you give us some more information on that?
Yes, over the recent months, we've really seen major transactions and capital being invested in the German market. For example, in April, Curaleaf completed the acquisition of Germany's EMAG for a base consideration of $50 million in cash. And just in June, and this month, the Sanity Group, who owns the leading German online brand Vi, closed a $44 million Series A financing round to really expand their operations within Germany and across Europe. And these are just two examples of the rapidly intensifying activities in the German cannabis space, which inevitably will create stronger competition and require incremental investment to remain competitive.
So how hard was this decision for the board to make?
Look, it was a very hard decision. We've experienced a very strong cultural fit between the two businesses, between CannaCare and Elixinol Wellness. And we've built great, strong relationships with each other, and we respect each other greatly. But the issue was that the changing market dynamics would have required a level of investment that is currently outside of our risk appetite. And withdrawing from this transaction at this stage, whilst it's very, very difficult, is in the best interest of Elixinol shareholders. And our board felt from a governance perspective, we really needed to make the decision and announce it as soon as we conclude our diligence.
And will you be looking for any other potential acquisitions to replace this one?
Yes, absolutely we are. While our existing business is building momentum, M&A does remain an active part of our strategy. This is very much in line with the strategy we stated at the time of our most recent capital raise late last year, which was well supported by investors. I think as the industry really continues to consolidate, there will be other interesting opportunities around for us to evaluate. The key thing really for us is to ensure that the decisions we are making are in the best interest of all shareholders, that they're done so with strong governance in mind, and that the growth is achieved with a profitability lens applied.
And you mentioned that there's a positive momentum building in your existing business. Can you tell us a little bit more about that?
Absolutely. In our core markets, we're seeing really good momentum developing. In the US, we continue on our transformation journey that we have been on for over a year and a half, and seeing strong progress in driving revenues through digital channels and innovation, as well as continued cost controls. And equally here at home with Hemp Foods Australia, we're seeing really good performance from our new product ranges that are winning new national distribution, as well as continued growth from our e-commerce channels. So I think our strategies of building consumer brands within higher margin channels whilst continuously managing our cost is showing results, and gives us really the confidence to continue our investments into our existing markets whilst also exploring new M&A opportunities.
Thanks for the update today, Oliver. We look forward to seeing the quarterly reporting, which is coming out shortly, and whatever else you have in the pipeline.
Thank you very much, Juliana.